And our next speaker is Venkat Srinivasan, who asked the last question of Sarah. So the topic we're going to explore in this session is something that came up in Sarah's comments about offshoring and the declining importance of labor cost, which I think is kind of interesting idea. And it's something I know Venkat is going to touch on. Venkat Srinivasan is a serial entrepreneur. He's also a person who knows India extremely well. Some of his investments have been in the Indian market. And one of the companies that he's founded, which he's probably going to speak about, serves the Indian market, but it's a startup in the Indian context for the Indian market, but with also potential to sell all over the world. And he's very familiar with issues of offshoring. So I think it'd be fascinating to hear his take on what the outlook is for offshoring and new venture creation in India in particular. The other wonderful thing about having Venkat here is that he's a former professor of Northeastern University. He's a professor of finance who discovered that there's actually greener pastures in the real world. We take pride in the fact that we work closely with the real world, and sometimes we were sorry when we see our best and brightest leave and become part of the real world. But Venkat, it's so nice to have you back. Thank you so much. Over to you.
First of all, Ravi, thank you for having me back. It's been 20 years since I left Northeastern. I imagine time flies. This building didn't exist when I was here on campus. I left just when all the beautification started. But certainly it's been a fun journey the last 20 years. John, hi. And I think, so I'm going to touch on two things today. One is throughout these entrepreneurial experiences over the last 2 decades, I happen to have launched a setup, engineering, mostly product design centers in India. And my lens today is going to be India. That's sort of what I'm most familiar with. And then I think, so that's sort of relative to the earlier conversation, realized that was a lot of very interesting macroeconomic perspective. Mine's very micro, but with some two very important topics. So I'm going to talk about two sort of fundamental questions. One, that we've all heard about offshoring. We've seen enormous growth through offshoring, but off late you also hear about it slowing down. And what does it really mean in consistent with the theme of the symposium today? What does it really mean for these countries, especially, of course, India? And does slow down, what implications does it have? And I'm going to talk about it from a very micro perspective. What should these companies be doing? And what are they doing in order to overcome their challenges? The second, I think, is the idea that India can be a phenomenal startup destination. Can you actually start companies? And I know that just looking up Ravi's recent accomplishments, I see a lot of research on reverse multinationals. And again, this sort of touches on that idea a little bit. Can you actually use India as an R&D destination? Can you develop products? Can you launch ventures in a much more capital efficient way? And can you then bring it back and really grow globally? And many of you here, I heard EMC, I heard Raytheon. Clearly, there's a very much talked about, highlighted GE reverse innovation article that I'm sure all of you are aware of. So I'm going to give you some perspectives on that from my experience with a company that is doing very well, I should say, but a very early, very small, but a very interesting perspective. So clearly, the BPO industry in India is facing a lot of headwinds, right? So significant deceleration in growth. You're looking at very low double digit, soon to be single digit growth. And the competition is fierce. I know many other companies, senior management, TCS, Infosys, EXL, Persistent, etc. And there are sort of fundamentally, I think, 3 or 4 interesting phenomena. One, there's a significant demand slowdown, and we can talk about that a little bit more in a minute. 2, there is increasing competition. Gone are the days when people were still evolving, they were developing, and you could differentiate between one company and another. Today, if you have an RFP out, you'll have 8 or 10 or 12 players show up, and they will all look identical. So it's sort of become a commodity. And you could have predicted this, we certainly did 10, 12 years ago, but clearly that sort of come to be. Third is, I think, a fundamentally unsustainable business model in the long run. And I think Sarah talked about this a little bit, and she talked about it in the context of manufacturing, that labor will become less and less of a factor. I think labor will become less and less of a factor in services as well. And we'll sort of touch on that a little bit. So I think this is sort of, I was talking to the CEO of a company called Persistent Technologies, which is a public company listed in the Indian Stock Exchange. We're about a $500 million company based in the US on the West Coast. And he was sort of telling me anecdotally that, look, there was a time in the late 90s and the mid 2000s when all you really had to do was, it was raining and all you had to do was walk out and you will get wet. And it was that easy to get deals. And now it's become really, really hard. And that's because there's really not much differentiation. And we'll talk a little bit more about that as we go on. So the demand slowdown, here is an interesting observation that the number of big deals has dramatically declined. So people are fighting for smaller and smaller deals, transactions, and gone are the times when you would have $100 million deal or a $200 million deal. It just doesn't happen. Those things are all gone. In fact, the competition part is actually forcing a change in the character of these deals, and we'll just touch on that in a minute. So clearly, slow recovery from the U.S. recession, extended euro crisis, and also an interesting phenomenon that you may or may not know is in the BPO market in India, there's a huge domestic component. The domestic BPO accounts for a fairly large portion of revenues for these companies, and with the slowdown and the deceleration in the Indian growth rate, certainly that has also been affected. And now, actually, interestingly, these are all dollar-denominated businesses. So the weakening of the rupee has actually helped these companies, but that's just a short-term mask. And it's helped us quite a bit. The rupee has weakened by about 10-20% over the last few months. It's been quite dramatic, and certainly we've seen we have a fairly large center in India, about 500 people, and we've seen our monthly expenses go down about 10-20%. But that's it's a sort of a short-term, we think it's a short-term thing. But anyways, but that's only doesn't sort of take away the fact that demand fundamentally is slowing down, and demand for pure services. So if you think about stepping back a bit, if you think about the business model here, actually let me get to that in a minute. Now there's an interesting dire prediction by the Hackett Group. They think that really there will be no outsourcing after 2014, and declining from 2014, and in 8 years that this will go down to zero. It's sort of an extreme exaggeration, but clearly indicative of where people think this market is headed. Interesting things out, and when you look at India in particular, there are certain types of outsourcing opportunities that are flying or going out of India into other countries. And this is particularly true for the call center business. To us, it seems like India has sort of given up on the call center business. And at one time, call centers, it was sort of every day you saw 10 or 20 new companies starting call centers. That's actually, that's changing quite a bit. And you see Philippines, I think, is the major gainer of the call center business. And you can, you can see that NASSCOM, which is an industry association in India, estimates that India has lost about 10% market share in the BPO industry. And I think call center business has been the major cause or sort of major portion of that. Now, I think increasing competition and business model challenges are somewhat intertwined. Before I sort of go into the business model challenges, just to touch on competition a bit. Today, when I just mentioned that today, when you get an RFP, you get bids from these firms. They're all going to look alike, and you know the standard BPO response, the standard BPO business is if a company wants to lower costs or outsource a 200-seat function. This is sort of how the industry functions, and this is the terminology they use. They issue an RFP, you get bids, and the standard bids used would be something like $25,000 a head for 200 people, and a 1% productivity give back every year. That's sort of a standard proposal, 1%, 2% give back on a $25,000 per head cost, and then the rest, that's sort of a standard business outsourcing proposal that you get from these companies. What's happening today is most of the renewals come up. What's happening is since the competition is forcing people to really change that game. So price is becoming the basis of competition. So now people are saying, well, to win this bid, I've got to give back 10%. To win and 20%, et cetera. And now they can't really do that. You look at that, on the one hand, increasing competition, and then you look at all these fundamental challenges with the business model. One, as I'm sure you know, there's significant wage inflation in India, a 20, 30% average wage increase year on year. And you see lots of reports in the news media about different companies slowing down their rate of the annual salary increases, compensation increases. But that's sort of really misleading because that's an average. And if you really want to keep your good people, you've got to do 20, 30% still. You can mask the average, and maybe that's a war of attrition that I don't know where that will lead, but we're finding that on average, expectations are still pretty high, and the really good people, and perhaps we're seeing this more because we're smaller, and this is from our own experience, and we don't have 100,000 people, we have 500, but certainly I think the good people still command a good 15, 20, 25% increase. That now in a service-based model and a per-head-based model, you don't build in that kind of cost increase in your RFP in your proposals, in your deals. So that obviously puts pressure on margins, right? There's high inflation. Sarah talked about this, and clearly, therefore, that sort of puts more pressure on the wage increase. There is a big issue with services firms because the standard approach here is you're just shifting a function from here to India. People talk about process improvements, but there's hardly any. When I've visited many BPO operations, it's generally a labor-oriented approach there. Now, clearly, everybody talks about process improvement. Some of them have some technology, and they're sort of applying some of it, but there's no fundamental transformational type of technology so far. But that's about to change. And realize that when you just shift something from here to India, you're really not really achieving any major transformational improvements in the process. People talk about it. Some people, everybody attempts it, and I'm sure some are successful. There are stories, GE and others, Amex, et cetera. But the reality on the ground is there's not huge improvements in these processes because they're still very labor-oriented. Six Sigma and so on really isn't going to give you much unless you do something significant, fundamental. Certainly there's regulations and so on. But I think the biggest factor, which I think we believed even 10, 15 years ago would happen, is now happening finally, is that I think technology is going to be the real game changer. And technology not in terms of just incremental technology, but technology that will fundamentally do away with the need for labor. Just like, robots in manufacturing, just-in-time manufacturing. I'm not suggesting robots and programming, even though I think that is happening I think in California. There is a company that has introduced robots that do coding, but that's not really. That to me is just tactical, incremental innovation. But I think we are going to see technology that's going to do away with the need for coding. So if you don't have the need for programming, if you substantially automate in an intelligent manner, technology is becoming more and more capable. And that, I think, is the game changer. And all these firms are rapidly either acquiring or developing those kinds of technologies. I'm just going to use this. This is Rage is one of these companies, we think. And this is an interesting case where this is a very large global financial institution. All of you know this company, and they wanted to launch a new line of business. There's a new line of commercial lending products, and the CEO had already committed to the street that this would be up and out in 6 months. They were behind by 9 months, and so there was a lot of huge internal pressure, and you have big outsourcing companies very firmly entrenched in this financial institution. Cognizant has 4,000 or 5,000. I don't know if there's anybody here from Cognizant, but there's 4,000 or 5,000 people in this firm. IBM, the CEO of this company is on the IBM board, et cetera. So IBM is very big here. But the standard, so to launch this product, there's a good example. It would have taken them 18 to 24 months. Routine. This is a massive operation. And using the kinds of technologies that I'm talking about, this was actually launched in 77 days. The company's already booked $1 billion in loans. And say this would have normally taken a team of 200, 300, 400 people. And here is a company that had maybe put 10, 15, 20 people. In 77 days, this is a mission-critical launch of a new business that is a huge success. But this is the kind of thing that is going to happen more and more. Path forward for these companies. This is a thing that the Gartner group puts out called the hype cycle. They monitor different sort of new innovations, and they sort of chart them through their natural life cycle, like the typical S-curve type idea. But you see that most of the new innovations that people are adopting, there are a bunch of new technology innovations that are adopting. And the pure services-based, you can't quite read this, but the pure services-based innovations are all in their later years, and what Gartner calls the plateau of productivity. So I think clearly one path forward is, can you shift up? And you see Wipro acquiring consulting companies. You see IBM certainly has been doing this for a while. You see Cognizant acquiring vertically oriented companies. But I expect that there will be some rationalization over time. The DNA of a vertically oriented company is very different than the DNA of a purely service-oriented company. And that will sort itself out, but I think that is happening. I think even that is not as fundamental as adopting, and you see this happening, announcements by EXL, for example, that they're all embracing a fundamentally different business model. Now, realize the challenge here in the path forward is acquisition is actually perhaps an easier way to overcome this. But if you want to adopt the business process automation type technology where you're doing away with labor, I can give you another example where most banks get financial I'm going to give you financial services examples. But most banks get financial statements, and they have underwriters, and they could do what's called spreading the financial statement. They assess the risk. It's all done manually. And this is a typical offshoring type function. There are lots of accountants in India. You offshore this. Somebody else is spreading these financial statements, entering them into a spreading or a spreadsheet-like system, and the rest of the process goes on. Now, you have thousands and thousands of people doing this. But there's a new interesting innovation where technology can automatically extract this data, spread the statements, and really do away with all the labor that is needed. So all of a sudden, what was being done by 1,000 people, we now only need 10 or 12 or 20 people, right? So I think there's a fundamental disruption that technology is going to bring about in the BPO industry. But to adopt it, there is a problem, right? If you're public, you've got to manage quarterly expectations, and you don't have it in none of your transactions. You've built in, all your models are head count times cost per head count. So there's a clear resistance and a short-term impact that, and you saw Infosys attempt to go through this, right? Infosys publicly said we're moving towards a business model. In the short run, there were all kinds of other challenges, but in the short term, you saw them lose margins and lose business and lose people, et cetera. But they're trying to make that shift. But talking the other day, I was talking to EXL, and they're struggling with these ideas. How do I go? There's quarterly expectations. What do I tell the street? How do I change the model? If I change the model, I'm cannibalizing my own business, right? So that's sort of fundamental. But I expect, in my view, that these are the two options, and that whether the current players do it, I'm sure some of them will struggle getting to that. But I think that there is a deeper, bigger implication for what happens if technology fundamentally disrupts demand. If I'm 100,000 people, I only need 1,000 people. What happens to the 99? Extreme case, right? It's an interesting question, and so which leads me to my next sort of topic. These two are related in some sense. So can all the talent be used to develop new products? Some of them can sort of shifting gears a bit, but still related. Can you actually offshore R&D? Can you, in any new product development, in any new venture development, you often have to try a lot of things. You think you know what the market wants, but you often don't. You start with something, you end somewhere else, right? And I think maybe hopefully you've experienced this. But any company, you may still be in the same business, in the same industry, in the same general area, but you morph. You learn from your marketing. You learn from early failures, early trials. Call them whatever you want. So the question then is, hey, can you try things in emerging markets, and can you, once you're successful, and the thesis is that you will spend a lot less money. It'll be highly capital efficient if you do it, right? So here's an example. This is a company that I launched about 2 years ago. And by the way, I should tell you that I loved my stay at Northeastern, and my becoming an entrepreneur was somewhat accidental. But I love what I do, and I still do a lot of research, and they just are called ventures versus research papers and so on. So here's an interesting opportunity that I just stumbled into, because I like I told you, I have had several offshore centers for all of my companies. Every one of them has had one small, but they've had starting in Bangalore, in Delhi, and now in Pune, and so on. And one thing I've noticed is, and having grown up there in my early childhood, one thing that's very clear and very well known to us is that we've got great talent, tremendous work ethic, phenomenal productivity, but communication is often a challenge. And so this is giving you a very sort of micro problem. And I would love for all of my employees in Pune to be able to directly interface with my clients. And they're very confident that many of them do that today. But there's some portion of those that are very good, but they don't have those communication skills. Generally, the ones that graduate out of engineering schools, because the focus has not been on communication, particularly English. And so anyway, so the reason I stumbled into this in a couple of different ways, but I've sent them to all kinds of schools. I've sent them to Carnegie's public speaking courses. I've sent them to British Council. They're big in English language education in India, in Lingua, which is a Swedish company. And they all come back, but I haven't seen significant improvement. Carnegie gives you the confidence to speak, but we don't have the vocab, and so on. And what I realized was that they were doing these courses, but all the teaching was based on static content that was completely irrelevant to what we were doing. So when they came back, after a week's course, they come back to work. They're in a different land. They're sort of using different terminology, different context. So I felt like there was a disconnect between their context and their learning. So then I was talking to a friend who runs a company, used to run a company here called Cambium Learning, which is a leader in the U.S. in the intervention market. And I realized that there was an interesting opportunity here and I realized that there was really no effective product, technology product, that would help you write better. Do you know of any product that helps you write better? That was my particular focus. Because I was seeing these emails, I was like, these emails can't go to my clients. Right? So my first focus was, how do I help them write better? And so that's how I stumbled into English Helper. English Helper is a technology firm, as you would guess. And then I realized that this is actually a massive market. This is a revelation to me. Even though, after you realize it, you think, that makes sense. I mean, and then we did some research. The global English online learning market is sized at about 30 billion and growing. And there's about 1 billion people learning English worldwide. Big markets, as you would expect, are China, much higher than India, but we started in India simply because we're more familiar with the market. Japan, Korea, disproportionate to its size. And you just sort of keep thinking Eastern Europe, Southeast Asia, there's everybody, and including the US is a growing market, right? And India, and Sarah touched on this a little bit towards the end in response to my question, India has an unprecedented challenge. There's 500 million people that have to be trained in the next decade. They're all coming into the workforce. It's a very young country. And they're all graduating, they're all coming into the workforce, they have to be trained, and then you have to find jobs for them. So it's a massive problem, challenge, opportunity. So we think of it as an opportunity. And so we think that and a service sector, domestic service sector, consumer markets are a strong growth area. So if you go to Kentucky Fried Chicken, they want their people, their waiters and so on, to speak to you in English. And that market is just growing incredibly strongly. And so we estimate about 250 million people need to learn English. And I realize that in India there is an English-based education system, but that only touches a small portion of the population. There's a huge portion of the population that is very desirous, really would pay anything to learn English, but doesn't quite have access. So we started this, and I want to tell you that English Helper is a social enterprise. The company is for profit, but we price based on affordability. So we will literally give the product away if you can't afford the product. But let me tell you, with all that, the company will still be very profitable. So the purpose is intentionally to make sure that we are not just, we have the sort of let me just, I'll go to the subsequent slides and tell you. So the idea so we launched in about 2 years ago. We tested the market a little bit. We have 2 products, one for reading, comprehension, and the other for writing. The writing product is just launching. I have a background this is one of many things I've done in my academic life, but I have some background in computational linguistics. So we created a product that is a artificial intelligence-based technology that as you're writing, it will improve your writing. Grammar, style as a part is still evolving, but grammar, it is pretty good. And in context, right? So you don't have to leave when you're typing your email, it will begin to tell you, look, here's a problem. This sentence isn't worded constructed properly. And you have all kinds of writers. This is not just a small, typo here or there. These are fundamentally people who can't construct sentences. And then there's the reading comprehension product, which is a text-to-speech engine, which helps you with spoken English. And again, in your context, it builds confidence. You can test your diction and so forth. But English Helper, again, in the context of the reverse multinational idea, It's growing fast, and I'll share some numbers with you in a minute. It's also now just launched in Philippines and I believe Malaysia, Sri Lanka. So it is beginning to happen. And in India, the numbers in 2 years are pretty impressive. I don't know if you can see this. I can't quite see this here. But from a handful of schools 2 years ago, we're in about 600 schools. So we've gotten to the point where the company, the venture, has established itself. It's the largest English-speaking, independent English-speaking venture in the country, technology-based. There are lots of bricks and mortar type with highly inconsistent delivery, which I don't think will survive. But we have managed to solve several problems. And sort of going back to the GE idea, I'll go into it in a minute. From just over 200 users, 8,000 users, and that was the first 6 months. We're at about 180,000 users, but that's nothing in India. Right, 180,000 users is great, but right now the company is working on. So it's gotten to a point where we know the product works, we know our delivery processes work, we know people outcomes are significant. I think that's the other thing I should emphasize. The goal is not just to roll out another product and this may sound altruistic, but it is true in what we do. It's not just to walk away from, sell the product and walk away. It's to make sure that people actually learn English. If the outcomes aren't strong enough, then we don't want to roll the product out. So the outcomes are very strong. And so we spend a lot of time, but now we're really focusing on scale. The company is just about to announce it has a strong partnership with a channel. I expect that this channel is in 25,000 schools, so about 10 million students. And I expect that in the next 6 months, the company will hit a scale change and hit the 10. The goal is to hit 10 million to 20 million the next 2-3 years. Right? And India has 1.2 million schools. So it's a fairly large, but getting to them is a massive challenge. But here's some of my observations in the spirit of this symposium. One, that we were able to try this in a domestic market that is very heterogeneous. There are different types of segments in this, so it actually is a very good test bed. And it's also a test bed because it has lots of challenges still, infrastructural. Remote villages in India have no internet connectivity. So how do you deliver this? So we bundle it in, and our partner is a very large company in India called Infrastructure Leasing and Financial Corporation or something like that. They actually have a huge education business, ILFS, and they have come up with an interesting innovation which combines a projector and a laptop. And so literally what happens is teachers travel with one of these to remote villages, and they put it up a little wall, and they teach. Much in contrast with what we are used to, one computer, one child, etc. This is a very different landscape. 20 people share one computer in a school. They get half an hour a week, if that. But they are so eager to learn, and you see that hunger, and you see the outcomes are quite significant. Anyway, so we were able to adapt the product to solve some of those infrastructural challenges. And 3, we've been able to do all this in a very capital efficient way. We've only spent, I think, 2.5 to 3 million, relative to what we would have normally probably spent 15 to 20 million getting to this stage. And the company is, doing pretty well. It's a price elastic market, so we really are focusing on the bottom of the pyramid here. But it's a very good test for the bulk of this market. The English market globally is likely to be a price elastic market, right? The other thing that we did find is this is broadly not just English helper, but also across the BPO industry, that it's easier to find non-engineering talent than engineering talent in India. And it's not like you can't find them, but you have to. There's again a Harvard Business Review article on how much Indian companies spend on training their employees, and which is very true. So I would go in with the perspective that you're going to get fantastic people, but you have to train them. And I think that you have to sort of build it into the process, and we do. Of course, you need to worry about IP protection. Here's some interesting use cases. This one here is a top 3 retail chain, one of the ones that's been in the news lately. But you see, for us, outcome is very important. And I'm sure for everybody, outcome is important. But product, does it really help improve your English language proficiency? So we have very strong assessment and measurement that is done right from the beginning. So this is not an afterthought. I'll just share. Here's some really interesting in the sort of the spirit of it being a social enterprise. These are some really, really interesting stories. These are all people who work in different cities in Kentucky Fried Chicken, Yum brands, right? And you can see how much of a change it is making in their lives. English is aspirational in these countries. So this sort of I'm moving a little bit beyond the topic here, but this is a sort of a lucky opportunity for us because we're combining a really big market opportunity with a social impact. And you can see these are countless stories like this, where English has the ability to change their career, change their trajectory. Well, let me stop there and see if there are any questions.
Karthik?
First of all, thank you for this great presentation. My name is Karthik Krishnan. I'm a assistant professor of finance in the business school, and I actually work in the area of early stage financing and venture capital, and I have a paper with the CM on international finance markets. And one of the things I was curious about, since you're a serial entrepreneur, is what is the situation of early stage financing, especially like angel type financing, seed type financing in the Indian markets or the general emerging markets? Because one of the things that we, at least in my study, that I find is, while international venture capitalists are interested in these markets, they're not very interested in very early stage financing because they're so far away, and they may set up offices to mitigate that disadvantage. But a lot of it has to come from the domestic sort of early stage market. So I was wondering, what do you think is the current situation and a potential growth trajectory for that?
I think, Karthik, that's a very good question and a valid observation. I'd say maybe 10 years ago, there was practically no seed capital available. And I suspect you found that through your research as well. I would say today the situation is different, but still not, clearly no comparison to the US. But there are many smaller venture capital firms that I think are willing to seed finance. But there's in my mind, there's another factor at play here. And in talking to some of them, they're still not ready to take the kind of seed level risk. They call themselves seed venture capitalists, but they're not ready to take the seed level risk. And so I think you have to couple with the capital efficiency. I think that mindset is because when you ask for $500,000 or $1 million, first of all, the seed amounts in India are smaller. And that ties in with the notion that this is a market that it doesn't take you as much as it would here. So if you combine the two, I'd say there's more seed capital available today, but the risk appetite has changed gradually. Better today, so consistent with your observation, there are several, and there are some, there are some impact investors that have emerged, right? Omidyar is a good example. I think that is the way to go in India. Almost a lot of new ventures with social impact, social enterprises. They're all for profit, and that's the way it should be. I think the whole notion of a non-profit, to me, it doesn't make any sense. But the fact is that there are impact investors, Khosla, I know that Kanwal Rekhi, there's many impact investors, and that I think is where you're likely to. So more access today than before, but still a problem. And one thing I should tell you is, as you know, I'm sure that the government has announced or has set up the National Skills Development corporation, which is acting like a venture capitalist.
Venkat, if I can just abuse my power as the guy controlling the mic, what is the business model for the English helper?
English helper is a recurring. Everything we do is fundamentally a recurring revenue model. It's a subscription-based business model, but people pay as little as a rupee a month.
So they decide how much they're going to pay based on.
Well, we structure it based on where they are, what can they afford. I mean, we have the just sort of Indian context. Some of you won't know, but we have the sort of the high elite private schools like Don Bosco, Delhi Public, and all of. They're also customers. They pay a retail price (SRP), and then we go to rural Karnataka, and there people pay maybe a rupee, maybe 10 rupees a month.
Got it. Thank you. Yes, Martin.
Martin Walter. I serve on the International Business Council for AIM. I heard you use the phrase technology is a game changer, and I think that's very important. I think your presentation was wonderful, and I have a question for you,
Please.
which if I may, I will get to. And I've been in manufacturing. I'm very optimistic about it because I think we underweight the prospects for so much of the new technology, miniaturization, 3D, drug research, and there are many more. My question to you is, are we in fact focusing too much on aging populations and low birth rates in many countries, and overlooking the fact that I think the last place one looks for the next advance in technology is today's existing leader. Massachusetts is a very good example of that. You look at Polaroid, you can go beyond Massachusetts to Kodak, you look at DEC, and so many companies failed to see, as you have pointed out, that, hey, the innovation is there. Have we really got better prospects than we're giving the system credit for in terms of what manufacturing can do when we look at space research that is becoming less governmental and more private industry? I hope I've asked my question.
No, great question. I do think that we are overlooking potentially a counterbalancing force. But I also think there's in technology counterbalancing an aging productivity, anticipated productivity decline. I also think there's another factor, and that's the longevity. There's significant research that, I mean, we're living a lot longer than we used to. And so our working time frames are kind of therefore lengthening. If we can only manage to live longer, more healthily, I think, in a more capable way, I think that would also be an interesting factor. But yes, I do think technology alone without that longevity may have some impact, but I think longevity will also have an impact.
Hi, I'm reading a book called Borderless Economics, which I received through an affiliation with the Legatum Center. And it's a really great book, actually, and it's making me think a lot about, they talk a lot about diaspora communities as well, and the power of diaspora communities, and they actually gave some case studies connected to Indian companies and the diaspora communities connected to Silicon Valley. And I'm wondering if, and even connected to seed capital, if there are ways to increase systematically those relationships across the borders.
Yeah, I think some of the names I referred to earlier, that is happening in, I don't know if it's happening in a sort of a systematically, but it's happening on a sort of a one-off basis. This company called Indus Advisors. Omidyar is a good example. Omidyar Networks is not only just India, but it is set up shop in many different developing, emerging markets. But I think that systematization is happening through this notion of impact investment. Because I think people are associating cause and social outcome with some of these investments. And it is certainly starting, it started with the diaspora, but I think it is morphed into impact investment. And yes, the bigger players are there. There is the Bain Capitals of the world, the Matrix Ventures of the world in India and other places. But they're generally looking for bigger, more established companies, not new venture. Some of them are, but not all of them. And going back to Karthik's point, they don't always focus on seed. For them, the definition of A is B or C, and the definition of a seed is A or B. So, but I think these impact investors are. I was in Pune about 6 months ago, 6 months ago, and there was this big conference of Ashoka Fellows, and 90% of them were social entrepreneurs. And so that is a good example of somebody giving them 25,000, 50,000. But in India, that goes a long way, or we think. And I think that I think is happening. So more systematical today than maybe 5 or 10 years ago. But it's still not a huge. I mean, there's a huge amount of entrepreneurial activity. I don't know if you're familiar with an organization, again with reference to India, we call the Indus Entrepreneur. Right? Most of Thai's activity is in India. Thai Boston doesn't have as much entrepreneurial activity, in my view, as you see in Thai Delhi. And so, there's certainly there's tremendous amounts of entrepreneurial activity, and I think that in turn, my sense is that in turn will catalyze more access to capital. Right?
Okay, I'm afraid I'm going to run out of time. Venkat, thank you so much for a very enlightening talk.